For example, if you'd asked the same question to Jeff Bezos in 2003 and said, like you just had an 80% loss in Amazon, do you ever wish you sold Amazon in the year 2001?
Uh-huh. Yeah, and I,
Jeff
I take your
Bezos
point.
could have sold Amazon in the year 2000 and avoided a 95% loss.
Mm-hmm.
Do you wish he
That's
did?
true.
But you see how foolish that is, right? For example, Mark
mm,
Zuckerberg, could have also sold Facebook, just before or just after the IPO and avoided a 50% loss.
uh-huh.
And, in fact, Jeff Bezos could have sold Amazon 5 different times and avoided an 80% loss. And if he'd sold at any one of those 5 times, he wouldn't be one of the richest people in the world. So I think that that trying to time the market is a trader mentality. But if you look at all the richest people in the world, they're not traders, right?
The hodlers.
Bill Gates, Steve Ballmer, Jeff Bezos, Elon Musk, Mark Zuckerberg, right? Larry Page, name the person that traded their way to that situation. You can't really do it. Like trying to time the market is ridiculous. If you look at statistical analysis of Bitcoin or the S&P, I think the conclusion generally is that like 80% of your returns come in like 1% of the days.
Yeah.
So if you miss the top 3 days of a year, you might lose 80% of your return. If you miss the top 6 days, you lose it all.
Yeah.
So the way this is going to work is it's going to look like you're not making a lot of money 98% of the time. And then you're going to wake up one day and you're going to find out that the sovereign wealth fund of some Middle Eastern country just bought $10 billion of Bitcoin. It's going to double or it's going to triple. And then you're going to be kicking yourself and screaming, saying, oh, well, I could have bought it at blank and I didn't buy it at blank. And you'll be angry. I think that the trading mentality is just really an awful mentality for anyone that if you're not running proprietary algorithms on high-speed computers, like I get it if you're a high-speed computer trader and you're like slicing a tenth of a penny 1 billion times an hour. Like I get that kind of trading, but for 98% of the population, people don't have any proprietary edge to trade. And so generally they all get beat by the market trading. I'll give you some simple stats. Like let's look at since MicroStrategy entered the entire crypto economy, we got involved in the second quarter of 2020. We announced a $250 million Bitcoin buy in August 10th. If you look at the numbers since we actually made our Bitcoin purchase, the money supply expanded 36%. The M2 money supply expanded 36% in the US. Gold is up 7%. Gold didn't track the money supply. If we had bought gold, we would be way lagging behind the money supply. The NASDAQ index is up 19%. It barely crawled forward, but it didn't actually keep up with inflation. The S&P is up 29%. So if you bought pretty much all of the desirable companies in the index, it didn't actually hedge your inflation, it lagged inflation. And why? Because you're owning securities and the corporate management teams have inefficiencies. They're basically an overhead cost. Bitcoin's up 229% since then. And so when you think about that, what's beating inflation? Bitcoin is. What's losing? The traders are all losing, right? And most of the other assets are lagging. And everybody's thinking that they can time the market. But as a practical matter, I think they do a statistic and like 95% of active traders underperform the market. So MicroStrategy's got a strategy, right? Which is we're buying Cyber Manhattan. We're buying up, Howard Hughes went to Vegas and he looked around and he thought, this is a good idea, city in the desert. I'm going to buy it all. But he didn't buy the buildings and he didn't set up the casinos. He bought all the land. Okay. And he bought the idea is you buy the land underlying the city, municipalities like Summerlin, they're built on top of his land. They're still building things on top of the land that Howard Hughes bought long time ago. Just like it's not a bad idea to own Manhattan. The trading, it's a different business, right? And I just don't think it's a good idea for most people. But regardless of that, if MicroStrategy was trading, we would just be a public hedge fund. Okay, so the real problem with that is if you're an investor, how do you value a very opaque hedge fund that will do whatever? For example, if I just told you, I bought some Bitcoin, but I also bought some ice cream trucks. I might also have bought some Luna. How would that have worked out? Right? I might.
Not very well.
Right? But here's the thing. There are thousands and thousands of public companies. People want to invest in something that they understand, that they can trust. So if you're going to be a theme park company, that's what you should do. If you're going to be a movie company, if you're going to be an oil company, you should be a pure play, and you should focus, in a laser-like way on that, because that allows a rational investor to put you in their portfolio. For example, like maybe you hate Bitcoin. If MicroStrategy has a strategy, which is we're long Bitcoin, we're levered long Bitcoin, well, then that's good, right? Because now you can short us. It's not a bad thing for people to short your stock, because if they short your stock, eventually they're going to have to cover, right there. On the other hand, maybe they like Bitcoin, but they think it's 99% likely to fail. Think about it. You have $100 million, so you put 1% of your portfolio in it, and you want to find someone that actually is pure long Bitcoin, you see? So if we're transparent and predictable, then we allow a rational investor to allocate their portfolio rationally. And they just don't want us to be unpredictable. What happens if we become unpredictable? You see, like, if I'm predictable, you might meet with me, understand what I'm going to do, and say, I wanted to put 5% of my portfolio into Bitcoin, and you might actually invest $5 million after a 1-hour meeting, right? But if you met with me and I said, I'm a genius and I can trade everything, and I know when to sell and I know when to buy, and I'm going to time the market, and I have all these algorithms, you're like, well, maybe you do, maybe you don't, but 95% of the time, those things don't work. And the point is, I have just, if you're the investor, you want to hedge the risk. You don't want the management team to hedge the risk. I'm a black box. So after you meet with someone that says they've got some wacky, complicated trading algorithm, instead of actually investing $5 million, you invest zero, and you study it for 500 hours. And so let me put it a different way. You could probably raise $1 billion in one day if you're predictable, even from people that don't even like Bitcoin. Whereas if you're unpredictable, you could work for 1,000 days and raise nothing. So you get where I'm coming at. The world wants certainty, it wants clarity, it wants conviction, and it wants you to execute with focus. So it happens that we believe in Bitcoin. But there are plenty of people that trade our stock. You could buy our stock and go long our stock and short Bitcoin, you see? There are people that may actually invest in us that don't have our degree of conviction, but they respect our clarity, they respect the transparency, and they respect the fact that we're predictable. And it's very important in this world, of chaos, that you actually stand for something